This video is sponsored by RAN. If you want to get 10 trees planted in your name, then watch this video till the end. There are about 687 cities in China, and the real estate sector accounts for a whopping 29% of the country's total GDP. However, the Chinese real estate market has been grabbing a lot of media attention lately due to the corporate debt of one of the biggest real estate companies, Evergrande. In fact, Evergrande is the most indebted company in the world with $300 billion debt and liabilities, and now it's struggling to pay back and already defaulted on some of its debt and on the path to bankruptcy. If this company doesn't get a bailout and bankrupts completely, the effect might ripple through the global economy like it was in 2008 when the US housing market crashed. But this is the tip of the iceberg, and not only the big problem that China is facing now. So in this video we will talk about how Evergrande has pulled the biggest Ponzi scheme in the history of the world, how did China become a land of ghost cities, and did Chinese economic miracle backfire? In China, there are about 65 million homes that are empty, and it accounts for 20% of the country's total urban housing. These 65 million of real estate are enough to house the entire population of France, and it includes large sections of the cities like Tianducheng, Thamstown, Binhai, and many others which span across hundreds of square kilometers, and they are known as ghost cities. These ghost cities in China have well-connected roads, infrastructure, skyscrapers, and a variety of public spaces, but they are vastly underpopulated. These unoccupied apartments and fancy villas make a significant portion of China's enormous housing market, which is twice the size of the US residential market. And it hit $52 trillion in value in 2019. Before getting into the question why they are empty, we have to understand the culture of investment and the mindset of Chinese people. One of the biggest differences compared to the people living in the US and Europe, far fewer Chinese citizens invest in the stock market. For example, in the US, around 52% of the population owns stocks, and around 65% are homeowners, while in China, around 7% of the population owns stocks and about 90% are homeowners. This includes 70% of millennials, with many planning on buying additional investment properties. The mindset in China is that the real estate always goes up and up, and there cannot be a bubble whatsoever. This speculation in investment property is also why real estate holdings in China account for a big share of total household wealth. Around 70% of household assets are held in real estate. The demand is so huge, even the Chinese government put restrictions on the number of apartments one household can have in one city. People even started divorcing their spouses just to be able to buy additional real estate, but they still live together. The Chinese government collects the sales revenues worth billions of dollars from land sales and taxes from the developers. And the reason behind this real estate-driven economy lies in the country's constitution. As China is a communist country, technically you don't own any land. All the land belongs to the state. So when developers want to build on a piece of land, they have to lease it from the government, and they pay huge amounts of money in local land auctions. So this gives the government strong incentives to lease to real estate companies and encourages them to build more and more. Unlike in Detroit and other ghost towns in the US where homes and buildings are abandoned and look like a war zone, in China it's different. They are not abandoned, but rather they are sold out to investors and buyers, and simply just unoccupied. Each year, around a total of 3 million homes are built in Europe and the US, but China has been constructing more than 15 million homes annually, 5 times more than the entire Western world. The extent of the real estate market development expansion in China can be visualized from the fact that China has used more cement for construction in just 3 years from 2010 to 2013 than the US did in the entire 20th century. So this real estate market and craze to buy more apartments among the Chinese population have created a steady stream of wealth for the government, but as a side effect, it also led to outbursts of ghost cities where people just pay and never live there. Due to this uncontrolled urbanization and construction, there are around 50 ghost cities in China. While they are testament to China's reliance on real estate as a driver of the economy and its belief that it's a safe investment, their exact quantity is hard to define. It might be even more than 50. So this brings us to the most indebted company in the world, the Chinese real estate giant Evergrande. Evergrande is one of the top real estate companies in China, and it recently ranked at 122nd position among the world's top Fortune 500 companies. The broader Evergrande group encompasses for more than just a real estate development. Its business ranges from wealth management, making electric cars, cinemas, theme parks, food and drink manufacturing. It even owns one of the country's biggest football teams, Guangzhou FC. For the past 2 decades, Evergrande has taken advantage of cheap credit to massively expand its real estate empire. The company reported $108 billion in annual sales and some $356 billion in assets. Its portfolio is massive. Evergrande owns over 1,300 real estate projects across 280 cities in China and has property services management arm involved in almost 2,800 projects across over 310 cities all over China. Additionally, it has other ventures across unrelated industries and directly employs over 200,000 people. Evergrande has grown its assets 23-fold since 2006, becoming the largest home developer in China. To put Evergrande's asset growth into perspective, Evergrande has grown its assets 5 times faster than its Chinese peers, and it's often described as too big to fail. It's a term in the financial market that describes a business sector or a company that is so deeply ingrained in the financial system that its failure would be disastrous for the economy. Therefore, the government considers bailing out the company or even an entire sector. For example, the most notable, like the US did in 2006, bailing out Wall Street banks and US car makers to prevent total economic collapse. Last year, Beijing brought in new rules to control the amount owed by the big real estate developers. Companies that already had a huge debt to expand suddenly found the taps turned off and began struggling to complete projects, pay contractors, and meet both domestic and foreign repayments. So real estate giants like Evergrande found themselves in the sinking ship, amassing $300 billion debt. When Evergrande did its restructuring, it sold 1.6 million apartments. These apartments were not even built. So Evergrande has to pay its debt and somehow find the money to build these 1.6 million homes and give them to the consumers who have already paid the price. You might be asking, how did that happen? Where did that all money go? Well, Evergrande has a financial arm that offers wealth management products. They essentially were like a bank, but offering low-risk, high-yield bonds to investors and their clients. They targeted their own employees, even putting a condition to employment contract that one has to invest into the company to work in there. Bond yields were ranged from 7.5 to 9.5% and bonus returns of up to 12% per annum. It's a pretty attractive deal. Additionally, Evergrande gave Gucci bags and Dyson air purifiers to its investors on Christmas as a gift. It was too good to be true. Evergrande was essentially borrowing money from everyone in a scheme that looks suspiciously like a triangle. It borrowed half-built homes from homeowners, offered them to employees, contractors, and investors, all of whom it has borrowed money from alongside some banks and hedge funds, all to pay back other employees, contractors, investors, hedge funds, and banks. And then maybe some of that money will be used to build or finish homes for the homeowners. Well, it's a mess. Like any Ponzi scheme, this works as long as it's accelerating, but inevitably it's the same endgame for any Ponzi. When the market slows, like in the pandemic, those incoming streams of cash start to fall behind the growing arc of cash demands. Evergrande has 800 unfinished projects and 1.6 million people waiting to move in. Financial Times interviewed an insider who works in Evergrande's wealth management arm. He literally said some wealth management products proceeds were used to repay previous products, but sales plummeted, making it difficult for the business model to continue. Well, using the proceeds of investment products to repay previous investors is the definition of a Ponzi scheme. When you invest in a financial product that is meant to go into the product not to repay the previous investor. When you pay in interest and in Gucci bags, it becomes unsustainable and the house of cards will eventually fall. Like the US, China is a huge player in the global market as the second biggest economy in the world. And currently, Evergrande is its biggest wound, like the Lehman Brothers was to the US in 2008, which caused a global financial crisis. The future of Evergrande is uncertain, but a slowdown in the Chinese real estate sector is definite, as the real estate accounts for a significant portion of the country's economic output and could have ripple effects on global growth. At least 11 Chinese property firms have defaulted on dollar-denominated bonds since Evergrande started to crumble. Evergrande owes money to pretty much everyone: suppliers, big banks, trust companies, foreign investors. Well, it's Asia's largest high-yield dollar bond issuer. It has about $20 billion of bonds outstanding, and foreigners have a huge chunk of it. And also, it had a relationship with 128 banks internationally. It didn't say which banks, so people won't panic, but one thing is certain that HSBC Holding, JP Morgan Chase, Citigroup, and others are huge players in the Hong Kong market. Domestically, there are hundreds of companies that do business with Evergrande: construction companies, material suppliers, and contractors, which may suffer losses and potentially could go bankrupt, creating massive unemployment and chaos. As China is the biggest exporter in the world, supplying the majority of the world with cheaper products and materials, the prices of goods all around the world might go up. Most importantly, the potential impact on China's financial system. Evergrande owes money to about 171 Chinese banks and 121 other financial firms inside China. Therefore, if the company completely defaults, few banks and firms will collapse with it, and other lenders will be forced to lend less. This could lead to what is known as credit crunch. If companies can't borrow money, it's excruciatingly painful to grow, and in some cases can't continue operating. A credit crunch would be a very bad news for the world's second biggest economy. It's unclear whether the Chinese government will step in. If they do, the government will have central control, which could be a problem for Evergrande's multiplicity of stakeholders, including global ones. UBS estimated that there are 10 real estate companies in China with potentially risky positions with combined contract sales of almost 1.9 trillion yuan, or 2.7 times Evergrande's size. In other words, Evergrande is only the tip of the iceberg. Ultimately, the fate of the Evergrande is very much rooted in the way the Chinese government liberalized the economy since 1978 with an open-door policy. When the Chinese government began to liberalize the country's economy, it held on to strategic assets and industries, also decentralized very widely, ceding control of the parts of the economy that it did not consider to be extremely important. A huge part of the Chinese economy is decentralized to the local level, to the provinces, municipalities, towns, and villages. So on one hand you have a state-controlled economy, and on the other, private firms and local state competition with very few regulations. But one of the unintended consequences of decentralizing and deregulating is that it didn't create a structure that could keep certain parts of the economy well regulated. So you have a situation where there are tons of new stakeholders, a lot of government, private entrepreneurs who are basically operating in a part of the economy that is essentially the wild west. And now the Chinese government is cracking them all and taking it to itself. Well, finishing the video on a positive note, if China suffers economically, it will be bad for the global markets. A lot of people will lose money all around the world. It will be bad, but it would also force a lot of countries who are dependent on imports from China into creating local manufacturing and being dependent on themselves, boosting local employment and economy. As we have talked about how several African countries are building a Great Green Wall to combat desertification, and climate change makes desertification even worse, and it will be a catastrophe. So now you have a chance to make a difference. So today's sponsor is RAN. It's a website that makes it easy to calculate and offset your carbon footprint and how to reduce it. You can make a monthly contribution to offset your carbon footprint by funding carbon reduction projects. For example, my favorite one is afforestation in East Africa. This project helps subsistence farmers in the countries like Kenya, Uganda, and Tanzania. So once you sign up, you will receive monthly updates from the projects you support. Every project you help on RAN has a monitoring plan to ensure it's having the impact that you want it. So you can monitor satellite imagery, you can measure tree trunks, every acre reforested in detail. So offset your carbon footprint on RAN. The first 100 people who sign up using the link in the description will have 10 extra trees planted in their name. That's pretty much it. Thanks for watching. If you liked the video, please hit the like button and subscribe. And thanks to everyone who's supporting me on Patreon. Your support means a lot.